the purchased firm's net assets. Yeah. So actually, what you do is you compare the purchasing price to the fair value of the purchased firm's net assets in an acquisition. Yeah. So think about one company is acquiring another company. Yeah. And then the acquirer, the buying company, says, okay, what is the price? What is the purchasing price? And then compares it to the net assets. Net assets means assets minus liability of the target company, of the acquired company. Yeah. And the remainder, the difference is goodwill. Yeah. And a goodwill is kind of like a firm value. It can have to do with a brand name, for example. But the thing is that goodwill is only allowed to be recorded if purchased. Yeah, only when you buy goodwill, only in an acquisition, goodwill is allowed to be recorded on the balance sheet. Yeah. So internally, you're not allowed to record. You're not allowed to record internally generated goodwill. So, for example, if you think about Apple, is Apple allowed to record its goodwill on the balance sheet? No, it's not allowed. It's not allowed to record because Apple has generated the goodwill by itself. Yeah, but when another company, yeah, let's say Huawei, buys Apple, yeah, then Huawei is allowed to record the goodwill of Apple on its balance sheet. Why? Because now it's more objective. Because now Huawei has a purchase price, and when you have a purchase price, then you're allowed to record the goodwill. Yeah. So because then it's more objective. Yeah. So goodwill generally has an indefinite life. Goodwill generally has an indefinite life. That means there is no amortization. Yeah, there's no amortization. And but it's subject to impairment tests. Yeah, it's subject to impairment tests. So in the case of goodwill, IFRS, the standard setter says every year. Yeah, so you have to do an impairment test and ask whether the stated amount, the book value, is higher than the recoverable amount. And if that is the case, yeah, if there is a difference between the recoverable amount and the book value, then you have to write down the goodwill. Yeah, so no general amortization, but impairment testing. Yeah. Does that make sense? Do you understand what goodwill is? Or are there any questions? Is it clear? Okay. My impression is that when I close the video function of my computer, that the internet is that your connection is better. Yeah. So now. Is the connection okay now? Okay. So when we're talking about internally generated intangible assets, when we're talking about internal, so this is not purchased assets, but internally generated assets. Then generally we are not allowed to recognize it as an asset. Yeah. In the case of goodwill, it is not allowed. Yeah. In the case of goodwill, if we generate our goodwill internally, it is not allowed. So think about Apple, think about Huawei, think about Coca-Cola. All these companies have generated a lot of goodwill internally, yeah, but they are not allowed to put the goodwill on the balance sheet. Actually, you can argue that, for example, for Coca-Cola, goodwill is, and the brand name is, the most important asset, yeah, but they are not allowed to put it on the balance sheet. Why? Because it's internally generated. Yeah. For other internally generated intangible assets, you have to differentiate between the research phase and the development phase. Can you tell me what the difference is between research and development? Do you have an idea? Do you have an idea what the difference is between research and development? Yeah, development goes further and goes deeper, and it's more to work towards an end product. Yeah, so development is work towards an end product. Yeah. And research is more like an open-ended investigation. Yeah, so this is the difference. This is the main difference. And for research, yeah, the rule is no, it is not allowed to put it on the balance sheet. Yeah, so it's not allowed to put it on the balance sheet. Instead, you should expend it. Yeah, it means it goes right into the income statement, and it's not allowed to put it on the balance sheet. For the development phase, it's different. Yeah, when we're talking about a development, and development, as I said, is a work towards an end product, then the question whether you can put it on the balance sheet depends on certain things. Actually, the firm, the entity, must be able to demonstrate the following. Yeah, it must be able to demonstrate that there is technical feasibility for the product. There's an intention to complete the product. Yeah, so technical feasibility, intention to complete the product, an ability to use or sell the asset, that it's probable that future economic benefits are generated, availability of necessary resources, and the ability to measure the expenditure at the related expenditure. So if all these conditions are met, then and only then can a firm put development on its balance sheet. Yeah, the development costs. Yeah, and if these criteria are not met, yeah, then the costs have to be recognized as expenses. Yeah. Internally generated brands, customer lists, and so on are not allowed to be recognized as intangible assets. This slide shows an overview of tangible and intangible assets. Yeah, so both of these are long-term. So both are long-term tangible and intangible assets. And as a general rule, if you're thinking about the question whether to capitalize or expense a cost, the rule is capitalize all costs that provide future benefit, yeah, for the business, and expense all costs that provide no future benefits. So no future benefit, not expanding, not capitalizing, not putting it on the balance sheet. If they provide future economic benefits, if they make an asset more valuable, yeah, then you generally are allowed to capitalize it. Yeah. So if we're talking about capitalizing or expensing more specifically, when we're talking about a new asset, then capitalize all costs that bring asset to the intended use, including the purchasing price, of course, which is the most important element, and transportation costs and taxes paid to acquire the asset. With an existing asset, you can capitalize only those costs that add to the asset's usefulness, that make it more useful, yeah, that make it better, yeah. But if you're talking about repairs or maintenance that is necessary to keep the asset going, then you have to expense them. Yeah, you're not allowed to capitalize them. Which depreciation methods to use? Yeah, think about we have several. We have talked about several depreciation method. The most popular one is the straight line method. But we also talked about accelerated depreciation, or also the depreciation method that depends on the usage of the asset, and generally you should use the method that best matches the expense to that best fits for the asset, essentially. But in practice, actually, most firms use straight line method. So if you're looking at financial statements, actually 90% of the straight statements, or even more, when you look at the long-term asset section, 90% of the companies use the straight line method. Yeah. And we're talking about intangibles. It's not called depreciation, but amortization. And generally, intangibles with finite life have an amortization, yeah, and those with an indefinite life have no amortization, though they are not amortized, which makes sense because there is no end to them, and that's why you shouldn't they shouldn't lose value, and you shouldn't amortize them. Are there any questions? Or is this clear? No questions? Okay. All right. Then I would suggest we have a break here. So break here, 15 minutes. See you in 15 minutes. Okay?